This is Coach Jason Ballard, and I'm a business wingman. Over the years, I've learned a lot from working in our family construction business, serving as a senior officer in the United States Air Force, and running 12 different organizations around the world. Many people helped me get to where I am today, and it's my mission in life to serve as a personal wingman to others. That's what this podcast is all about, providing knowledge, tools, resources, and mentorship to help people soar to their highest altitude. And welcome back to the Soar Higher Podcast. This is your host, Coach Jason Ballard. It's a real privilege to be with you today. We have a really cool and exciting show for you today. We're going to be talking about something we have never talked about on the show, and it's actually something that, most people don't even know about. It's one of the best kept secrets in business. This is the ability to use other people's money to grow your business and be as successful as you want to be. But you'd just be so surprised at how many people don't know this. And so we're going to uncover this. We're going to make this available for you today to help you make some really good financial business decisions in your company. So today we have an awesome expert on the show. Not only is he a former military or a fellow military veteran in the Marine Corps, but he's also a partner and a senior consultant in a company called Guardian Chamber Business Solutions. And they're a business and financial management firm that focuses on helping companies flourish through business credit, capital infusion, cash flow management, all to help them grow and achieve different things in different ways as they mature in their business. So without further ado, I'd like to introduce my good friend, Shawn King. Welcome to the show, my friend.
Hey, Jason, thank you. Appreciate you having me.
Yeah, great to have you, man. And I got to know Shawn over the past number of months. He lives in the same town of Louisville, Kentucky that I live. Came across him through, just normal business connections and events and things. And he does some really amazing things with folks to help them in their business. And most people don't even know about this. So Shawn, help us catch us up to speed on you and who you are and how you got to where you are today.
Yeah, sure. Be happy to. So Shawn King, I'm originally from the Detroit metropolitan area. When I was 20 years old, I made the decision to join the Marine Corps, something I want to do for a very long time. And I finally worked up the courage to do it. When I first joined the Marine Corps, for the first 4 years, I was logistics. I was an embarker. I did a couple deployments to Iraq. And then in the summer of 2008, I went on recruiting duty, which is everybody's nightmare in the Marine Corps. Started recruiting in Howell, Michigan. And then I went down to Lima, Ohio for a few years, back to Detroit, bounced around with some billets there, moved to Louisville in June of 2016, did a quick stint in Harrisburg, Pennsylvania for a couple years, and came back here as a recruiting instructor of Recruiting Station Louisville. And my wife and I made a decision for me to retire. So I'm actually just retired 1 July. So exactly 1 week ago was my official retirement date. I am married to my beautiful wife. Her name is Holly, and we have 3 daughters, April, Anna, and Aubrey. They are 19, 17, and 12. Let me tell you how I got started into Guardian. It's honestly by complete accident. I made the decision to retire, and I started dropping some resumes on LinkedIn, got my resume together, and Guardian kept coming up as something that I'd be a top candidate for. And the description was kind of vague. But I decided to drop my resume anyways because it was an easy apply. And I got a video the next day, had to watch a video that was very descriptive. And that video did 2 things. One, it really upset me because the whole time I'm thinking it, the whole time I watched the video, I'm thinking, why don't people know that this exists? And then 2, that video really resonated with me. And because of that, that's the reason I'm with Guardian Chamber now. And the reason it resonated with me is as long as I've known my wife, she's always wanted to have a boutique, a woman's retail store, a small boutique. And when we moved down to Kentucky, there just happens to be one on every corner down here. And she almost instantly started working at one, then started managing it. And about 7-8 months later, we got the opportunity to purchase it, which we did. So we bought a boutique in Shelbyville, Kentucky in April of 2017. And unfortunately, in July of 2022, we shut it down. It was either liquidate the business or take a home equity loan or a line of credit on the home. And we weren't prepared to do that. So we shut the business down. And if I knew what I know now, I'm not saying that my wife's dream would still be alive. I think there's a pretty good chance. But what I can promise, if everything was on our EIN and the business was standing on its own financial legs, then when we liquidated it, we could have filed bankruptcy and we wouldn't have carried a tremendous amount of debt with us that we're still paying off today. So when I found out about Guardian Chamber, for 16 years, I've been educating people on what the Marine Corps is, because your average citizen really doesn't know a whole lot about what we do or what we don't do. And now I'm educating people on something that they even know less about. So I like to say I'm a glutton for punishment, but I got to be able to help. If I don't know that I'm going to provide some value and make an impact that day, I really don't feel like getting out of bed. So that's why I joined Guardian, because the small businesses in Louisville, Kentucky here, they need to know that there's a better way.
Yeah. Well, I think businesses everywhere need to know there's a better way. I think, coming off of COVID and some of the issues there, a lot of people shut their doors, a lot of people struggled, suffered, didn't know what to do, got into debt, and just, may have made some, ill-informed decisions, right? In the world today, Shawn, what I have found just from my own journey is that there's two kind of people in the world, right? There's the informed people and the less informed people. And I think, guys like you have a passion for serving. Obviously, thank you for your service in the Marine Corps and for all the sacrifices you and your family made there. But you're a guy of service. You're a guy that cares. You want to help people with things that they just don't know much about. Most people don't know much about the military, right? Less than 1% of the people in America today have ever served in the military. So it's kind of they kind of see stuff on TV and the movies and, push-ups and sit-ups and boot camp kind of stuff, and maybe some documentaries of some war in Vietnam or, Iraq or somewhere. But really the day-to-day life of a military person and their family, it's, most people just don't get it. So in business, there's a lot of things they don't get too. And so let's talk about what you do in Guardian. Obviously, you went into business with your wife. She got this boutique. There were some struggles, coming out of COVID that, especially these smaller boutiques really, really took it harder than some of the bigger companies. But you learned some things out of that about money and how to navigate things financially. And so talk to us a little bit about Guardian and the services and, things that you learned and how you transform that into the business you're now in.
Sure, absolutely. Thank you. About 600,000 small businesses close every single year. That number has increased since COVID. COVID is really what hurt us. We never really truly recovered from it. After shutting your doors for 6 months and having no business at all, that's really, really tough to recover from when there's bills and rent and things that you still continuously have to pay. So Guardian Chamber, what we do is we allow businesses to financially stand on their own two legs, and we separate the business from the business owner. The EIN that a business has, it's a social security number. It's literally the same thing, and you can build a robust credit profile exclusively around that EIN and gain access to capital at corporate rates and terms, which are always going to beat what you're going to be able to get on the personal side, regardless of your credit score. So businesses don't do this, especially small businesses. Big businesses, they work with EIN credit. This is how they grow and scale so quickly. When you have a bunch of money and it's not tied to you, just imagine in your mind the risk that you're willing to take when you can lay your head on your pillow and know that if it turns south, you're not going to be responsible for that money that you borrowed, because the business itself borrowed it, not the consumer. So there's very little information out there about business credit. First and foremost, that is the reason why EIN business credit is not used more often. One, there's just no information out there about it. The banks want to loan you money at X, not Y. And I don't want to use numbers in there, but when you get money at Y, it will always be lower interest rates than you're going to get with your personal credit score. Every single time it's going to be lower, and you're going to have access to higher limits as well. Two, it's a methodical process. You have to intentionally want to build business credit. It's not something that you can just stumble over. Like when we're 18 years old, in Equifax, Experian, and TransUnion start tracking every financial transaction that we do. They start sending you, credit card offers in the mail as soon as you turn 18. This is something that you can't stumble upon. You have to intentionally want to do it. And then three, you got to do business with the right people, because less than 10% of vendors and lenders actually report positive payment history to the credit agencies, Jason. And positive payment history is literally, that's the only thing that matters really to building business credit. If you can show over a reasonable amount of time that you can make consistent positive payments, there's corporate lenders and vendors out there willing to give you all kinds of money. You just got to do business with the right people.
Well, why don't people know about this? Like you're right. The EIN number, your personal kind of tax number for your business, that's separate than your personal Social Security number and things you normally would file your personal taxes in. Why don't people know about it? Everybody that's in business has an EIN number. They have to open up a bank account and legitimately do business and all that kind of stuff. So why don't they know about this? Why is this a secret?
The banks want to lend you money at 15%, not 5%, Jason. That's the reason. It's rigged. It's rigged. The system is rigged, and it's rigged for huge companies. What we're doing at Guardian is, if you take a small coffee shop here in Louisville, just a small coffee shop, maybe they have one or two locations, they're never going to be Starbucks. Let's be honest. They're never going to be. But why can't they put the same helmet and the same uniform on and play on the same football field? That's essentially what we do at Guardian Chamber. We allow you to use other people's money to grow and scale your business that's not tied to you. We put you on the same field as the big boys. And like I said, there's no information out there about it, Jason, because every time you drive into a new city, what's the biggest building you see?
The banks.
The bank. Every time.
Insurance companies. Yeah, exactly. Yeah, that makes sense. So tell us a little bit about this. How does this work? How, okay, I got an EIN number. I go into my records, I pull out the number and a couple of documents, and I then do what with it? I call you, I go to a bank, talk us through how this works.
Sure, absolutely. So let's just pedal back for a second. So everybody knows how consumer credit worked. I talked about when you turn 18, TransUnion, Experian, and Equifax, they start tracking everything that you do. Okay? Now, it just happens automatically. Nothing, you don't have to sign up for anything. It just magically happens. So when you're 18 years old, you likely can't go get a vehicle by yourself. You're going to have mom or dad co-sign for you. And you certainly can't buy a home when you're 18 years old. But you can get, maybe a $200 American Eagle credit card, right? And you buy some things, you make some purchases, you pay your bills on time. What's going to happen to your credit limit? It's going to grow higher and higher and higher and higher. And eventually, once you show that you can pay your bills on time, then maybe you can go buy that car by yourself. A couple years down the road, maybe you can go buy that home by yourself. The business side works the exact same way, but you have to make yourself look fundable in the eyes of corporate lenders and vendors. Essentially, what you have to do is we have to make you look like Starbucks on paper. We have to make you look like Amazon on paper. And it's little nuances have to take place. Things like your business name. Your business name has to be the exact same everywhere. Secretary of State, IRS, Dun & Bradstreet, which is by far the largest business vendor there is, business credit agency. They make the rules. They've been around for about 180 years, publicly traded company. And then you have Experian and Equifax business. So your business name has to match all 5 places. If your business is Shawn King, comma LLC with one, and then Shawn King LLC with another one, that flags as fraud. That little comma matters. Your phone number, for instance, you have to either have a landline or you have to have a voice over IP. You can't just use a regular cell phone number, which a lot of small businesses use. You have to be a part of 411. I know you remember 411, Jason, the National Directory. You used to dial it on a phone. If you're not a part of the National Directory, automatically flags as fraud. Your NAICS code has to match. You can't be a construction company and then your NAICS code says food and beverage, which I've seen before.
Yep.
That's going to flag as, I don't know, like the Ozarks, like they're trying to launder money through this company. So your email address, it has to be a domain. It has to match your website. So there's just a lot of nuances up front that have to take place in order to essentially make yourself look fundable in the eyes of corporate lenders and vendors. And once we get through that, because that's really the meat and the potatoes, once we make you fundable, now you're that 18-year-old child. Now businesses, corporate lenders and vendors recognize who you are. Are they going to give you access to $100,000 the next day? Absolutely not. What do you have to do? You have to open trade lines. You have to open vendor accounts. You have to open credit cards. You have to use the capital that they're giving you, and then you have to pay your bills on time. And then once you do that for a consistent amount of time, you're going to have access to all kinds of money. There's essentially 4 different tiers of building credit. So on the consumer side, we all know our scores run from 300 to 850. Yep. On the business side, they run from 0 to 100. You need to get north of 80 to unlock true corporate rates and terms and gain access to things like vehicle financing, commercial property financing, residential property financing, huge lines of credit through banks. But you have to get an 80 in tier 4. So what we do as Guardian Chamber is, if you remember, I mentioned that less than 10% of lenders and vendors report positive payment history. Well, we have essentially amalgamized with all of them. We know who they are, and we put them inside what we call a fundability suite. And you cannot be a part of our fundability suite unless you do 2 things. One, you have to report positive payment history to the credit agencies. And then 2, you have to give us your underwriting criteria. So when our members go in and they apply for anything with the assistance of their credit analyst or their credit advisor, they're guaranteed approval because the underwriting criteria is right in front of you. If you can't check all those boxes, move on to something else. If you can, go ahead and apply for it. You will get approved. How much you're going to get approved for, I can't answer that, Jason. That's all going to depend on other factors.
Yep.
But in order to get to that tier 480, you got to get to tier 180 first. And then you got to get to tier 280 and then tier 380. And essentially what we do is we guide you and help you get there with the assistance of the credit advisors that we give you. So in tier 1, you're going to open, let's say 3 trade lines, three credit cards, 3 vendor accounts, whatever they are. You're going to spend money, and you don't have to spend a ton of money, and you can use it for personal things too. If you're going to use it for personal, your CPA or anyone else would tell you to pay it off with personal. I'll tell you that's between you and the IRS. Just pay your bills on time. That's all that matters for us, because there's no grace period on the business side like there is on the consumer side. If you have a net 30 on the business side and you're 1 day late, you're getting hit with a negative payment. On the consumer side, we all know you can pay everything 29 days late. It will never affect your credit score. It's going to affect your interest rate. You're going to get hit with a late payment. I do not advise that, but it will never affect your score. The business side, 1 day, you're getting hit, and now you just took a step back. And we'll recover from it, but we're trying to go in one direction here. So in tier 1, you open those accounts, you spend your money, you pay your bills on time, and then eventually your score is going to grow and grow and grow and grow, and it's going to get to an 80. Now, once you're in a tier 180, you graduate tier 1, and now we're going to go into tier 2, and we're going to open up more accounts. There are going to be bigger lenders and vendors, right? Bigger banks, bigger gas stations, bigger vendor accounts, and you're going to do the exact same thing. You're going to rinse and repeat. Now, if you or I go buy a home right now, or we buy a car tomorrow, what's going to happen to our score? It's going to dip, right? It's naturally go down. Well, the same thing's going to happen when you go into tier 2 and you apply for those accounts. That tier 180 is going to dip. So in tier 2, we continue to pay our bills. We shoot back up to that tier 280. Now you graduate tier 2 and you essentially just rinse and repeat. And once you get to tier 480, your score is golden. And that's when you gain access to all different types of funding. And we guarantee that within our first year, as long as the members are doing exactly what the credit advisors are advising them to do. And your score is never going to drop. As long as you continue to use the capital and you pay your bills on time, your score is never going to fall. Now, it can only go so high, 100's the max. But what can go higher and higher and higher is something called a recommended credit limit. And that's something that's unique to business credit reports. When you pull a business credit report, it tells you what your recommended credit limit is. And that will continue to grow and grow and grow and grow as you spend the capital and pay your bills on time. And that's essentially how it works, Jason.
Seems like it is pretty easy. I mean, if a guy like me that was, old country boy, growing up in the middle of nowhere can listen to this and figure it out, I'm sure most other people could too. So talk about some of the advantage of this, right? I mean, it sounds like if you go through the business side using your EIN to build credit and leverage your money in that way, you get better opportunities, you get better rates, right? So you're talking significantly better interest rates for repayment of those funds that you borrowed.
That's exactly right, Jason.
What's the difference? Like, we talking 1 or 2%, or I mean, how big of a difference is this going to be?
It's all going to be contingent on who you're working with. But when you're borrowing $200,000, 1% is a lot of money. But it could be 3-4%, it could be 5-6%. It's all going to depend who that lender or vendor is or who that bank is that you're working with. But you will always have a lower interest rate when you borrow money on your business vice consumer side. You're also going to have access to much higher credit limits than you will on the consumer side. And the magic to it all, the thing that I love the most about it, is you untether yourself from the business. You can rest assured that no matter what happens to your business, the bank's not coming after your home. They're not coming after your vehicles. They're not coming after your kid's college fund. You can lay your head on the pillow every night and know that your personal finance and your personal assets are not at risk. It's essentially peace of mind, Jason, is what it is. We allow businesses to be businesses and to borrow money on their own. Businesses have collateral. They have, they're
assets and
Nobody opens a business to shut it down. Nobody does that. And when we open an LLC, we do so because we want what's called corporate veil. We want to be protected from our personal assets and our finances. We want to separate ourselves from the business. But that essentially doesn't happen very often, because the second you sign a personal guarantee, which most business owners don't even know they are doing, and if they do, they don't find out till the 23rd, 24th hour, that corporate veil is gone. It's gone. That big shield you're holding in front of you essentially just became a piece of plastic, and that bank's holding a 12-gauge shotgun. It ain't doing you any good. You are completely intertwined, and you put everything at risk when you sign that personal guarantee.
Yeah. Do you have like an example or a story or something where somebody, leveraged something on the personal side versus the business side, and kind of walk us through that example of how this plays out and, the benefits of all this? I mean, because this sounds pretty fascinating, and it sounds so, so logical. I can't believe people aren't doing it.
Sure, yeah. We worked with a young man that has 3 trucks. He's actually here in the state of Kentucky. I'm not going to give out any names of businesses, but he has 3 trucks. He has one at 9% interest, one at 17% interest, and one at 24% interest. And I'm only going to talk about the 24% right now. That 24% truck he has on a 36-month note, he will pay $21,000 in interest over the course of those 3 years. He's going to pay 7 times more than he's ever going to pay me. When we take his vehicle, and we're probably about 2 months away from it now, and we refinance, once his score's high enough, we refinance that truck with Ally Financial. he's going to get approved for less than 3% interest. 1.9,
Wow.
2.9.
24 to 3.
Absolutely. We're literally
Woo.
going to save that business thousands and thousands of dollars. And hopefully we'll be able to do it with a 17%. If we can't, we'll continue to use capital, pay our bills on time, and eventually we'll get to the point where we can refinance that vehicle as well. And then we'll refinance the 9%.
I've got to ask you, man, like who's funding this? Like where are you going to get those kind of cheaper rates? 20 somebody's giving them a rate at 24%, somebody else is giving a rate of 3%. Like are these the same people? Are these different banks, different lenders, different investors?
No, Ally Financial. Ally Financial and Ford Motor Company will offer corporate rates, and you can buy anything with Ally. You have to have those corporate accounts.
Same organization. This kind of reminds me of a 60 Minutes episode I saw, on the supplement industry, right? They got all the name brand supplements on the shelves and all the prices of those, but then right next to them they've got the generic brands, whether it's the Walgreens brand or the Walmart brand or the Kroger brand or whatever the generic whatever off brand is, but significantly cheaper. But yet they showed in that interview that it was all still made by the same manufacturer in the same plant in the same assembly line. It's the same thing with a different sticker on the bottle.
That's exactly right. That generic sticker, that's your EIN. That's what it is.
I'll be dang.
You're borrowing money. You're gaining access to capital. You're financing things on your business, not on your person.
What a difference that is. And that's huge, huge savings. And I think, and especially in this day and age right now with the economy and inflation and, trying to navigate through some of these post-COVID, situations that people went through, saving a few dollars here and there, that stuff adds up. I mean, we're talking a difference between somebody buying another asset, another building, hiring some more people or whatever, right?
That's exactly right. You have the ability to grow and scale,
Wow, that is amazing.
and you're doing it on money that's not attached to you.
You talked about the difference between, you talked about separating yourself from the business. A lot of people, the business, whether it's an LLC or a corp or something, there's still some kind of, connection there. So there's still an owner, there's still a partnership, there's still something that's the owning entity. So if something, I'm going to take I'm going to say like a roofing company, they're a pretty high risk company, right? Because they're on the roof. There's you're way up in the air, and it's risky to do what they do. If somebody did everything on the personal side and an accident happened, that could potentially take them down. Now, so, assuming they have insurance, right? Some kind of business insurance, but that only covers so much. But how do you recover from that? How do you build your reputation back from some mistake that's made or an accident that happened or, something negative, right? How does that differ than the business side? Like if you did everything through the business side, had the business insurance, what's the difference there? How does all that work? Why is it how are you actually separated from that? What makes it that way?
Well, the difference is the first scenario. Unfortunately, most companies would not recover from that, and they would have to close the doors. But whoever it is that's suing you in that first scenario, they can come after your home. They can come after everything that you personally own. In the second scenario, if everything's on your EIN, they can come after your business. They can take your business. They can shut you down, but they can't touch the home that your family sleeps in. That's the big difference. It's peace of mind.
Yeah, I've got a client and they had a fabricator that built a lot of their machines. And this fabricator wasn't very honest and they didn't weren't very transparent in what was going on in their business, and they decided to file for bankruptcy. And so I was talking with the client recently about, what to do with that, how to deal with that. And I said, well, you need to get in line first and file a lien or some kind of a lawsuit against them because we're talking. a few $1 million in lost earnings here because they had paid them ahead to build some systems for them, and then they took the money and ran with it and filed for bankruptcy. I was like, yeah, but you can still put liens on them, you can still liquidate, you still may be able to recover some of that money, but you want to get in first to be able to do that, and they are indeed doing that. And so I asked them, I said, so in this process when you're talking to the attorneys, was this incorporated? How is this funding, arranged? And he says, well, unfortunately, we can only go after the business assets. We can't, they had, somebody had advised them and they had, divided this thing up, or people would be going after their personal assets, their homes, their cars, their boats, or whatever they may own. And so things, sometimes things happen that's your fault. Sometimes things happen to bad things happen to good people and it's not their fault and they get in a tough situation. But you always want to do things to mitigate that risk, right? That's what, being a business owner, being a business leader, obviously it's about making money and providing good quality products and services to your clients. But every single day you should be thinking about, how do you mitigate risk? How do I minimize damage? How do I preserve our reputation? How do we do all that? This certainly sounds like, an ideal way to do that.
That's exactly right. That's exactly what it is.
So, Shawn, I want to shift gears a little bit here. Talk to us about, the kind of people you work with. Are we talking big businesses, small businesses, or all businesses? When's the right time to be thinking about this? When's somebody in a position to want to do some of the things that you're talking about? Kind of talk to us about those things.
Sure, sure. Ideally, somebody who starts a business should ideally, if they have the money, put everything on their business credit. But I also understand when you're a startup, you're using a lot of capital for other things. So startup companies can find us to be a little expensive. People who find us most valuable are businesses that require a ton of cash flow. So the trade industry, your roofers, your plumbers, electrician, your contractors, construction, flooring, roofing, real estate investors are very big because you can buy whatever it is that you want with your EIN. You can buy residential property. Trucking companies, trucks are very expensive. Gas is very expensive. We can ideally work with any company, but companies that require a lot of cash flow, or if I have found, is who finds us to be most valuable. Smaller businesses primarily. If you're a $20 million plus business, there is a pretty good chance that you have a CFO that has the knowledge that we do, and has already separated the business's finances from the owner's personal finances. But we found in those type of scenarios, sometimes that's not the case either. So really any business we can work out there. I'll tell you who we shouldn't partner with, and that's your single member LLCs, your real estate agents. So we'll go back to those who open an LLC and there's just a single member. They get a 1099, and they open the LLC just for tax purposes. We really can't provide any value for them. There's nothing. They have no expenses, and two, they're not going to have a need for any sort of EIN credit.
Yeah.
Unless they want to get into the real estate investing world one day. But your single member LLCs, your photographers that are happy making whatever it is they're making, we really can't provide them to be any value. Does that answer your question?
Yeah, I think that helps. I think people that have a lot of assets, continuously, recurring things, right? You're needing trucks, the trucks break, they, need to be taken out of service, and you go buy new trucks and, equipment, construction gear. Yeah, people that are doing a lot of transactional types of things. I can think of like technology companies that put in, a very expensive network, computer networks and stuff like that. All the, the firewalls and the routers and all the servers and all that kind of stuff. That stuff's really expensive stuff. that you have to replenish every so many years and keep them up to date and serviceable and all that kind of stuff. I mean, so yeah, I could see that for sure. I can see people that own farms, farmers with heavy equipment. That stuff's really really expensive stuff. And yeah, they get some government subsidies, in farms, but it doesn't cover everything, right? So yeah, I can see a lot of folks in those kind of situations they can really really benefit from this. And again, separate themselves legally and financially from anything. Like a bad day happens, a natural disaster blows down the building and destroys some of the stuff that you have. I mean, it's expensive to replace all that. So, really, really cool. So, what is your process like? If you if you're listening to the show, and let's say you're a business that kind of meets this profile that Shawn is talking about. Shawn, how do you work with people? What is that process? How long does this take? What kind of things do you need to be thinking about to be prepared for this? Walk us through some of that.
Sure. Well, first, you sit down and have a conversation with me. I want to, first and foremost, I want to get to know you before I get to know your business. That's just the type of person that I am. And then I'm going to ask you a lot of questions about your business, and we're going to see if this is right for you. And if it is, awesome. You can become a member right away, and you can start the process immediately. You're going to get a phone call within 2 hours of paying for the membership. And then your credit advisor and yourself are going to walk through that fundability foundation. And if we can't knock it out in one Zoom call, then they're going to give you a lot of notes with some homework to do, some things that you may have to do on your own. And then we're going to continue to meet with you until you become fundable. And we're gonna hold your hand, white glove service through the entire process. It takes about a year, Jason, to get to that tier 480.
So this isn't some fast thing you can do in a month or two, right? This is a process.
No. This is the best investment you'll make in your business. This is an investment. You're not going to gain that. If you need money, we do provide funding. We have that at Guardian Chamber. We can do that, but you're not going to get it to your EIN.
Right.
We have separate vendors that we work with that you can get, that you can secure funding on your personal. But if you want money from your EIN on your business, that's not going to happen overnight. That's the long term. This is a long term play. It's something that you have to, once again, you have to consistently. Every business has expenses. Okay. What we're going to do with your credit advisor is we're going to do our best to transfer all of those expenses to accounts that report to the business agencies. That's what we're going to do our best to do. In more cases than not, we can get all of them. Sometimes we can't. Okay. Especially if a business owner is married to one company. I've been buying X from this company for 25 years. I'm going to continue to buy X from them. It's they're not helping your business credit at all, but I get it. You have that relationship with that company. If we can get all your expenses on your business profile and have them reporting, then you may have access to 3 to 5 times your yearly expenses at the end of 1 year. Like I said, we guarantee we will get you that tier 480 in 1 year, as long as you're following your credit advisor. But we also under promise and over deliver. So it depends on how much capital you're using. If you got 50,000 expenses every month, you're going to grow capital a lot faster than somebody who only has 5,000.
That makes sense. Shawn, as we kind of conclude today's show, which has been great, man, I think you've really opened the door to open people's minds to, some just different ways of thinking and organizing their business, posturing themselves, protecting themselves, which I think is just necessary, as we go forward, because you just never know what's going to happen in a global economy and interdependent, interconnected world we lived in. So as we kind of wrap up here, highlight one more time some of the benefits of this and why this is smart to do, and some of the things, maybe a couple of things that some of your clients have said to you when they've gone through this process.
Higher access to money. to credit limits, access to corporate rates and terms. You're going to have access to a lot more money. You're going to have access to cheaper money. Your interest rates are going to be cheaper, whether you're getting a line of credit, you're getting that SBA loan, you're doing a credit card, whatever it is, trade line, vendor account. Your interest rates are always going to be cheaper on the corporate side. If you want to grow and scale, you're going to have the money to do so, and it's not going to be attached to you. That is, in my opinion, the number one reason that every business owner should build a profile around their EIN. Whether you do it with Guardian Chamber or not, if you build that profile around your EIN, you can sleep at night and not have to worry about, I can't pay the bills tomorrow, I can't make payroll, I can't do this. What happens when I shut the business down and I owe X amount of money? Is the bank going to come take my home? Every business owner, almost every business owner, they've had that feeling. Every business goes through ebbs and flows. What if COVID happens again? You're going to have the access to capital to survive any storm, no matter what happens, when you build that credit profile around your EIN.
Shawn, we just thank you so much. One, for your dedication and service to our country and the Marine Corps. Thanks for being on the show today and taking the time to, provide some free advice and insight to some of the things out there that most people don't even know about. Just different ways to think, different ways to run your business, manage your finances, and allocate things and position things in a way that will help you be smarter and make better decisions. And so can't thank you enough for taking the time to do that. Shawn, if folks want to reach out to you, they want to talk to you, want to learn more, how do they connect with you?
Sure. My phone number is 586-201-5927. And my email is sking, that's SKING, at guardianchamber.com. Spelled is exactly how it sounds. sking, guardianchamber.com.
That's awesome. We'll put those things in the show notes, make it easy for folks to find you there. Just wanted to make sure we had the right things. Folks, I just highly encourage you to connect with Shawn. Not only is he just an all-around good guy, very passionate person, just wants to serve people and do things to help people in this world. He's been doing that in the Marine Corps and in other areas of his life, and he's clearly making a difference in the business community that he's been serving. So highly recommend him in the folks that he works with in his company. So that's it for today's show, folks. Again, great way for you to think differently, a great way for you to grow, scale, and pivot and protect yourself. It doesn't really, there's everything to gain and nothing to lose here. Because the number one reason of why people go out of business is they run out of money. They mismanage money. They underestimate their cash flow needs, or they underestimate their capital needs. And this is a kind of a golden key that can unlock some things to you that can mean the difference between you staying in business or going out of business, you scaling or you staying where you are for a lot longer. And it could mean, you losing your home and your personal possessions versus, protecting all of that. So very, very important, very serious stuff that Shawn and his folks can help you, work through. Next week, we got another great show in store for you. Next week, we're going to be talking about helping businesses get unstuck. So folks that are out there that may have hit a ceiling, that may be struggling in some ways, help them revitalize their growth and transform them and propel them into their next level of success. You don't want to miss that show. Another great guest. That's it for today. Have a great week, everybody.